Good afternoon, everybody, and welcome to the Fintech Nexus weekly news show. My name is Peter Renton. I'm chairman and co-founder of Fintech Nexus in our New York studio today, where through that wall is my good friend and colleague, Todd Anderson. How are you doing, Todd?
I'm good, Peter. How are you?
Doing great. And joining us, I think for the third or fourth time, we have Jonah Crane from the Claris Group. How are you doing, Jonah?
I'm well. Thanks for having me back.
Our pleasure. So another busy news week, and you just to preface everybody, we have to talk about FTX, but it's not going to take up our entire half hour. We are going to talk about other things, but we have to at least kick it off with that because the news just keeps reverberating. Really interesting story about this. The guy who is now the CEO of FTX, and I didn't realize this at the time, but now like John J. Ray III also managed Enron and its collapse, and he's done a whole bunch of other bankruptcies as well. And he said that this is the worst he has ever seen in his career, such a complete failure of corporate control, unacceptable management practices. It's just a shit show is really what it seems like it is, and we're still learning, but boy, it seems like the kindergartners were in control of billions of dollars and had no idea what they should do. It's a travesty, really.
Yeah, and I'd be curious as to what type of diligence did some of these funds and whatnot do on FTX, and how much did they have insight into the commingling of Alameda and FTX, and it just seems like they let him run amok in some ways, or were hoodwinked to the point that he was a modern day Madoff that would give the appearance that everything was in order when it wasn't. I don't know. It doesn't seem possible that like the Sequoias of the world would just hand over hundreds of $millions to someone who's just completely out of his mind. And at this point, the more that he opens up his mouth, the worse that it gets.
Yeah. We'll get about that.
He can't help himself on that.
We'll get to that. We'll get to that in a minute. But
I mean, just the lack of any oversight just seems to be astonishing.
Yeah. I mean, every new piece of information that has come out over the last couple of weeks has just made the situation look worse and worse from that perspective. In terms of there's just nothing resembling a real management team, nothing resembling anything like governance. They don't appear to have known which bank accounts were which and what money belonged where. The record keeping, I mean, the Alvarez Marcel guy is saying, I can't trust any of the financial information that I have here. Here are some numbers, bankruptcy court. I have no idea if they're accurate because the books and records are so poor. That is sort of astounding. And, I guess the only thing I can think of is that the last time, they were out raising money, it was still sort of the go-go years, more or less. I mean, it was late enough in the stage, but nonetheless, I mean, there's just no excuse. These are investors. Some of them are pension plans. They have real fiduciary duties to their investors, and I cannot imagine how they did a level of diligence that is commensurate with those obligations, and yet didn't uncover anything. I mean, based on the balance sheets we've seen disclosed over the last couple of weeks, if that's what the balance sheets look like that they got, I'm not sure.
I mean, that's the thing that's insane. How, like, okay, you want to get the bare minimum you get when you're investing, obviously, is the balance sheet, the income statement, the cash flow statements. That's the bare minimum. But they should be doing a lot more than that. You should be getting details. You should be diving into each line item on the balance sheet, right?
Yeah, and aside from the investors, I mean, the thing that surprises me is there are a lot of pretty sophisticated traders on this platform. I mean, it was known as like the traders platform, right?
Mm-hmm.
And these are people who should know what to look for just from an operations perspective. And if this is true, and it's hard to know because this is like pieced together from Twitter DMs and whatever, but like if it's true that somebody signing up on the FTX account would actually send a wire to an Alameda account at a bank and then go live on the exchange, I mean, that right there should be a red flag. I mean, the whole thing is puzzling.
Yep.
And,
Yeah.
I have to assume more will come out in the bankruptcy, because that's what happens in these processes, which are very public.
Right. Yeah, and
It feels like there's like some sort of facade that they were all given that made it seem legitimate when it really wasn't. And it's just any bit of information that comes out just makes it more and more puzzling as to how this went on for this long.
Yeah.
You figure if this was true, it would have unraveled a while ago, just because you can't keep up with all the lies and the intermingling.
Yeah, well, that's the thing. I mean, and with the next story is related. If you haven't, there's a story on Vox.com, and if you haven't read it yet, this Vox reporter was DMing SBF on Twitter and got a response, took screenshots. It is astounding to read this article and to read some of the things that SBF was saying. I mean, just like it's a wild conversation. Basically, he admitted that his regulatory efforts were mainly for PR. That's one of the more tame things that he said. Basically said the regulators were useless. And his biggest regret in all of this was that he filed for Chapter 11. He said he could have cured if he didn't file for Chapter 11. Which I mean, to me, as Jonas said, like the whole, it seems like they originally set up FTX because they didn't have the proper bank accounts, so they just said, "Oh, let's just wire money over to Alameda," and they never changed that. And so the money, they weren't actually moving money. And I actually don't think this is not a Madoff scandal where Madoff knew what he was doing and was being deceitful. I think SBF just was over his head and didn't really care about the details. But yeah, I mean, this Vox article, I mean, will go down in the annals of journalism as just incredible, particularly for someone who is in bankruptcy and is probably going to be sued he already is being sued, but he could go to jail, and he's just writing all this incriminating stuff. Just amazing.
And I just don't get how he's either completely unwell, or he's in over his head, or he's burning. Like, it seems like every day it switches as to what the motivations and what his role and his thinking behind this was. Because at some stages it does feel like maybe he was in over his head and didn't truly understand what he was doing. And then you read the Vox thing, and it seems like, he was pretty deceitful and, almost sociopathic in how he views some of the criticism and, how he thinks people's motivations are in their business and the regular banking world. It changes so rapidly, his state of mind day by day. It's stunning that he's even allowed to talk publicly right now.
I couldn't even make it to the end of that article. I mean, I'll just try and be charitable and say I hope he's okay. But I mean, in terms of what he knew, or I do think at some level he's just taken an enormous amount of risk for a while, and I think the deceit appears to have really come in when things were blowing up and he was trying to patch it together, right? And in that respect, it looks like a really disastrous and messy version of MF Global, where they're losing money on their trades and pulling in customer funds to try to fill the gap. And that's when things really seem to go off the rails, just trying to stitch things together and doing it in a fairly ham-handed and what appears to be largely illegal way. Right.
Yeah. So the big question is, will this crash in FTX, will it affect fintech? And we interviewed Mike Cagney this week, the CEO of Figure, and got his thoughts on it. He basically seems to think that it will be primarily contained inside the crypto space. He thinks that in some ways this may actually be positive for companies like his and because they're doing something in the regulated banking space. That's what the whole kind of the Figure, Provenance, blockchain, the USDF consortium, all doing it, trying to create a new system that is stable coins issued by banks. So it's all banks are at the center of what they're trying to do. So he thinks it might actually be beneficial because the regulators already have deep understanding of banks, and they probably want crypto to be more inside the banking system. But that, I feel like, he's certainly not he feels like that crypto, obviously they continue to have these blow-ups, and that they're not really doing. They're not doing things that have he called it a useful social utility, which I think was an interesting way to put it, and a charitable way to put it for that matter. But I'd love to get your thoughts, guys, on what effects on how it will impact fintech, if at all.
I mean, my own hunch is that it'll be more or less, it'll focus on the crypto sector. I think, that was true in May. It was true in 2017. I think it's true now that these issues are relatively unique. And if anything, from a regulatory perspective, it will keep the regulators' attention on crypto and less on some of the other things that they've been focused on. We'll maybe come back to later in the conversation. With respect to crypto and whether it sort of turns out to be positive or negative, I mean, look, the U.S. regulators, bank regulators, are feeling pretty good right now about the fact that they've largely kept crypto outside of the banking system. And the existential question that, folks like Figure and others are going to have to figure out is, the regulators are going to have to figure out that will affect the figures of the world is, do we think that some version of, finance on a blockchain, whether you call it crypto or some other version of it, is here to stay or not? And if so, what's the role that they want the banking system to play in that? And they've not even followed through on what the work that they did last year and all the work that they promised to do this year. They promised guidance on things like custody, which we haven't seen. And so the big question I have is, if they think that this is here to stay and they got to figure out the role of the banking system here, then there's work to be done. And, maybe they're just trying to wait this out. I don't know, but we really need to figure that out soon so that we can put the right frameworks in place. Otherwise, it's going to be really hard to convince people that, they should trust this space, that they can trust activities carried out on a blockchain and so forth. So I think that's the task at hand, I think, for those who want to see the industry flourish and to see at least pieces of it within the banking perimeter.
And it's something I said last week too. I think now's the time for the crypto industry to try to jump into the arms of the regulators and say, hey, what can we answer? What can we do? How can we help? There's a lot of activity in the space that's good, that's above board, that is, wants to do it in a compliant and trustworthy way. How can we help, show you that and keep some of the speculation and some of the crazy risk taking, out of that type of conversation, or at least to the side, because there are kind of these two separate conversations: the speculative prices and some of the crazy risk taking, and then there's the Figures of the world and others that are building kind of slow, methodically, and trying to integrate into the regular banking or fintech or financial system.
Right.
I think that door will only be open for a precious few people
right.
who have demonstrated real credibility. I think large sectors of the industry probably won't get that opportunity now, and that door might have been open 5 years ago, 4 years ago, even last year, but I think a lot of them probably not.
And I was we had a dinner last night with 16 fintech CEOs, and it was we talked about this, and one of the things that came up, and we're gonna move on after this from FTX, but the thing that came up that they said is they're a little concerned in that regulators, I'd love to get your perspective on this, Jonah, that regulators are going to lump anything non-bank together. So fintech non-bank and crypto non-banks kind of get it's like they're going to sort of overreact to fintech. Now, I don't know if that's going to be true, but I'd love to get your perspective, Jonah.
I don't think so anymore. I really think regulators have moved beyond that. They're they're still on a learning curve in many areas, but they're sophisticated enough to tell the difference between those two things. And if you look at, just yesterday, Treasury put out a 128-page report on non-banks and their impact on competition in financial services, and looked at issues like bank and fintech partnerships. And they talked about a whole bunch of deposit and lending and payments activities. And it wasn't really, it wasn't conflating crypto and fintech at all. And that was the Treasury Department, and a lot of the language in there suggested to me that they were talking to a lot of the other regulators. So I don't have that fear as much. But the attitude.
Is there a potential fear with sorry, is there a potential fear with legislators overreacting and forcing the regulators' hand? Like, hey, we saw all these people lost money in FTX and Genesis and whoever. We have to do a bill that then puts a mandate to the regulators. Is that a risk versus the nuance that regulators might understand versus legislators?
Yeah, I do think Congress will feel some pressure to act. I think whether you can get a bill that, Patrick McHenry as chair of financial services on the House side is going to support and get through the House, and Chair Brown is going to be chair of banking on the Senate side, will support and can get through the Senate and pass and ultimately be signed by the president. That's an outstanding question. There are plenty of bills floating around there over the last few years, and I think people are skeptical about some of them. They view them as sort of industry asks. Nonetheless, there's been a lot of work done, and I think so. There is the foundation has been laid. If people want to pick up pieces of what's already been worked on and move ahead, but you're going to have to bridge a pretty big gap between McHenry on the one side and Sherrod Brown on the other.
Yeah.
Right. Okay, moving on to the second half of the non-FTX show here. There was an article in Reuters, I think it was just today, talking about banks and looking to pounce on fintechs. We got JP Morgan have already done a bunch of acquisitions. PNC have done a couple. And there's pretty nice valuations for a lot of these fintechs. Some of them are down at more than 90% from their high. Pretty much everyone's down more than 50%. So there's potential of, there's a lot of banks who are on the hunt, and there could well be an explosion of deals over the next year and a half, is what this article is suggesting.
We shall see. I mean, public valuations obviously have gotten crushed in fintech going back to, about a year ago.
Mm-hmm.
But there just aren't that many public fintech companies, right, who make logical targets for banks. There are some. Private valuations, obviously don't have to get marked to market. And I think it's a big question. The big question in terms of will this deal wave that people have been talking about ever materialize, is a question of can we bridge the gap between price expectations, particularly of the still private companies, and price expectations of their potential buyers. And I think, I personally think there's lots of opportunity for banks here. In fact, I'm writing a piece on this now with my friend Todd Baker, and we think there's opportunity, but you're really going to have to bridge that price divide. I mean, even if you can bridge the price divide, if that's something like a distressed sale of a fintech company, can the bank or other buyer, make it attractive for the founder and his team to stay? So I think there are a couple divides that need to be bridged there.
Right.
Yeah, I'm always a bit skeptical that a wave of these things will happen. When usually it's more of a kind of a handful here, handful there, and like you said, Jonah, some of those issues just never get bridged to the point where the deal is ultimately consummated. I'm sure there's lots of conversations that'll happen. I think we'll see some. I don't think we'll see a wave of transactions, and some of this will depend on economic conditions. If they somewhat improve, VCs are going to pile money right back into some of these companies and give it another run, and their valuations will come back up from where they might be, which is lower today.
Yeah, I mean, if you're a private equity firm, there are probably opportunities for roll-ups out there, right? There are these sort of niche point solutions out there. You can roll those up into a platform of some sort. And if you're a bank, you've got a large customer base. And if there are interesting products out there that you can, use to sell to your customer base, you might be able to make a product or feature that wasn't otherwise super profitable on its own valuable. So I think there are opportunities, but, I agree. I kind of doubt we'll see a wave.
Right. Okay, moving on. The Financial Brand had an article this week about rent payments, and I think like this whole rental area it's a narrow niche, but it's actually a pretty big market, and there's a lot of innovation happening in this space. And you've got companies like Isuzu, Built, Stake, Ready Life, Jetty, Pinata. These are all companies that are attacking the sort of the rental market in one, and I'm talking about home rental, house, apartment rental, that sort of thing. There's no one that's really got the leading no one has a brand that has sort of gotten a huge amount of market share, but it's also still there's still a lot of people that pay their rent by a physical check, which is just crazy in 2022, but that's still the case. So Chase, this is what the article is about, is Chase is working, they're releasing a product called Story, Story. And it's aimed at large landlords, and it's going to roll out next year, but they're hoping to kind of revolutionize rent payments. What do you guys think?
I mean, it's something that obviously needs to be done. The tricky part is a lot of this type of market is pretty fragmented. You have some of the bigger firms that kind of own hundreds of thousands of building or hundreds of thousands of units. But you also have the ones that, I think the article mentions it, that own like one or two buildings. And it's like, are they going to have this giant setup and platform for one or two buildings? Or are they just going to say, hey, I know the 40, 50, maybe 100 tenants I have. I can have that on an Excel spreadsheet and just have them pay me, and I can understand who's behind, who's on time, and where that plays out. I do think Chase having it does make it a bit easier because there's the banking relationship, and if it's part of their program, it simplifies it for them. But there's still a lot of fragmentation. But this is one area where real estate in general just has so much room for just innovation across the board that I still think there's a lot to be done in a lot of areas in real estate. This one in particular, I think Chase can certainly get a foothold. I don't know how big of an impact it'll make for those smaller landlords that have the one or two buildings.
Yeah, I think you put your finger on the key issue, which is if this is really a market with a long tail of small operators, how do you get them on the platform? And I think if Chase can really make it easy to connect and set up and get going, then I suspect it'll make sense for them, and they can sort of develop a brand in the space. To me, this was a good example of an area where another reason banks often don't end up wanting to buy a fintech is because they think we can just build it ourselves. And I'd say in most cases they're wrong. That doesn't stop them from thinking it, but this is the case where Chase is just building it. So I thought I view this as an example of a bank really diving in. It's a smart kind of thing that I think banks should be thinking about doing, either organically or through acquisitions. We'll see if it's ultimately successful or not, but the only thing I can tell for sure right now is the name of the business is correctly spelled, so therefore it can't possibly be a fintech business.
Right. Yes, indeed. Okay, touche. So moving on, we've been following the news of Custodia Bank and their lawsuit against the Federal Reserve. We've mentioned it a few times on the show. More movement this week, or it was actually came out Friday, I think it was. But a federal judge has denied the motion to dismiss that the Federal Reserve wanted to have. The Kansas City Federal Reserve has engaged in unreasonable delay, according to this judge, because this is all about getting a master account at the Fed, which is normally a 5 to 7 day process. It's now been 2 years, it's been. When I first saw this, I thought, wow, you're really not making any friends by suing the Fed. It's the person who actually has to approve you. But it's, seems like that she may have a case.
Well, she's got a case that at least a claim or two has survived the motion to dismiss. So, the former lawyer in me will understands that it's still early in this process. I think the big question is whether this case results in, the big risk for the Fed here is that the case proceeds and, a court decides that the Fed really doesn't have any discretion here. And, that's a huge risk for the Fed because they really want discretion to make sure that people entering their payment system are able to live up to their standards. And, I think that's really what's at stake here. I think the fact that, the Fed has taken so long to deal with this situation, and there were some others before who didn't end up in litigation. Not great facts probably, and but I think ultimately if the Fed can escape preserving its discretion, it's probably still a win for the Fed.
Okay, moving on. I want to talk about there was an article in Banking Dive about One, Walmart's, that's ONE, Walmart's One, that is still just in stealth mode, I guess you would say. They haven't really launched yet, but when they do, the big question, this is what the article kind of asks, is this going to be a big success for Walmart? Because the thing that I think about when you're looking at all these fintechs, the neobanks, customer acquisition cost is just such a key metric for all of them. And when you've got 100 million weekly customers, and you've got a captive audience where your cost of customer acquisition is going to be, it's close to zero, you would think, or not. It's not going to be zero, but it's not going to be very much. And so, the question is, are Walmart shoppers looking for a digital bank solution? I think they already do stuff at Walmart. I think I'm bullish on one. I think they're going to be successful. I mean, even if you only get, 5% of Walmart customers, that's going to be a pretty thriving business right off the bat. And I think they can actually do much better than that.
Yeah, I'm curious how they also deal with, some of the stuff they already have, like with Green Dot and others, and how does that then integrate or mix with one, and can they come up with like a cohesive offering that's simple to the customer, that maybe you can do it through one, and it's like Green Dot's check cashing or prepaid card through one, something like that it simplifies it, because I think a lot of the people who interact with Walmart in their financial lives have become accustomed to some of these products, and now you're introducing a new one to it. I think easily they solve the scale and the CAC question with the amount of foot traffic and the amount of people that come into their stores. So I think they're going to be successful. Does it reach up like, super high echelon area, or does it kind of, fit in the 5 to 15 million of the biggest digital banks in the US and become like one of those?
Yeah, I think I would love to see their product roadmap and how they're thinking about that, and what kind of testing or surveys or whatever they're doing with their customers, with their employees, because I think if they do approach it thoughtfully and start to tick off things that people actually want in this context, they could be really successful. What I don't really see happening here is I don't think this will become like a Square, where they're sort of attacking both sides of a network solution here. They got the merchants on the one hand, and then Cash App with the consumers on the other, and they can create their own sort of closed loop environment.
Mm-hmm.
Walmart can do that to some extent, because they're massive, but I don't know how much it'll extend outside of Walmart. And so if you think about, will customers get a one account and a card and want to use that outside of Walmart, or will they really use it for whatever perks they can get within Walmart? Like discounts or whatever else, and that may still be a good business. And then if CAC is zero and Walmart is just saving millions and millions of dollars on interchange or whatever, maybe this all works out well.
Right.
Anyway, so the bar may be relatively low for it to be successful. I don't think this has to become the super app to end all super apps.
Yeah, and just one last thing I'll say on that is that Omar Ismail, who is the head of One, he was the head of Marcus at Goldman Sachs, and I think he was obviously on a pretty good deal there, and he's moved to Walmart, and I think I expect that there will be I expect it'll be more innovative than what people might think, because I think there's going to be it'll be new, and I think there'll be new features, particularly, and I think it's going to be very focused on user experience and simplicity. I think, but I feel like there's no company that's better positioned for success in the fintech space than One right now, is how it feels to me. But anyway, we're almost out of time. But one last story I wanted to get to. Shopify is teaming up with Balance to tackling the B2B payments experience. This is still like like the consumer payments experience is, I would say, there's lots of options. It's really frictionless. It's easy. B2B is still not quite there yet, and there's obviously Shopify are trying to make that better with this partnership with Balance, bringing sort of more of a consumer feel to B2B. It should be B2B should be coming better. There's no reason why it isn't, and this may be a step in the right direction.
Yeah, I hope so. As a Shopify shareholder, I also hope that Balance is taking all the risk on the financing options or the payment options. But it sounds like they were from the press release. But no, I think that's right. I mean, look, you're as a company that focuses a lot on payment, Shopify is going to probably just continue to try and figure out, hey, where are people on our platform have needs that we can help them solve, and this seems like a logical extension to me.
Mm-hmm. Okay, we'll leave it there then. Todd, thank you very much as always. Jonah, great to see you again. Appreciate your insights.
Thanks, Jonah.
Yeah.
Thank you.
Before we go, though, just a reminder, if you're interested in Latin American fintech, then you need to be in Miami in 4 weeks, because we will have Fintech Nexus LATAM, and we got all the major players from the Latin American fintech community will be descending on Miami. It's going to be nice weather, I expect, and it's going to be a lot of fun. So check out fintechnexus.com if you're interested in that.
On that note, this is price break week. So this week, you'll get the lowest ticket price we have left for LATAM. So if you haven't bought tickets, you can't get them at a lower price than you'll get this
That's
week.
right. Goes up tomorrow afternoon, tomorrow evening, actually. So that November 18th is the last chance to get a discount on that. Thank you, Todd.
Yep.
Okay, with that, we will be off next week because it is Thanksgiving, and we will see you all back here in 2 weeks. Thanks, everybody.